Hello everyone, and welcome to this presentation of 3 easy to keep trading resolutions for 2017. With us just all experiencing the new year, 2017, I want to wish you all a happy new year, and I'd like to talk about resolutions because this is something just about every trader I know, myself included when I first started trading, does at the beginning of each and every new year. But here's one little unknown fact I'd like to share with you. Did you know that while most traders do keep resolutions, and for this matter of fact, it really doesn't even have to be just traders, it could be actually resolutions concerning any topic or category. Did you know that 80% of New Year's trading resolutions are actually broken by mid-February? So we only have really just a few weeks left to go before we reach that threshold where most of the trading resolutions and the goals and ideas that you said you were going to stick to and focus on, either some brand new system that you purchased or some seminar or webinar that you went to that everyone said is the best, and you say you're going to follow everything, you'll just about break all of the rules. And the reason is because usually they're very difficult to maintain. They may look great on paper, and after someone shows you these convoluted results of how easy it is to make millions of dollars in a few years, when you actually try to implement them, they're very, very difficult. Well, I'm going to share with you 3 easy to keep resolutions. And if we look at this example right here in JP Morgan, as you look at this chart, someone would easily say, well, Steve, there's really nothing to do here. We're basically going sideways. But the resolutions I'm going to share with you today that you can start implementing as early as once I finish this presentation in another 30 or 45 minutes, you'll be able to spot buy signals such as right here, here, and here, where you would have been able to take advantage of a really nice move. In fact, the stock gained 12 points in 1 month after the first buy signal. And these are all incorporating what I'm going to be sharing with you today. So welcome once again. My name is Steven Primo. As you can see, we are first and foremost an educational company at Specialist Trading. I'm the president and founder, and my only goal is simply to educate you as a trader. Because in my 4 decades of trading, if there's one thing I've learned, it's that the reason why most traders fail is because they're uneducated. And when you don't have the education to make your own decisions, what do? You rely on some $1 million system that you purchase that costs tens of thousands of dollars, or you go to some trading room or chat room which costs you because it doesn't work. You don't know how to trade exactly the way the other person is telling you, or you listen to some guy on TV tell you what to do. So basically, you're taking yourself out of the game. And it's because you haven't been supplied with the correct information. Now, I know this from firsthand experience because this is what happened to me when I first started trading some 40 years ago. I was on the floor of the Pacific Stock Exchange. I started roughly about 40 years ago. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. Now, a specialist made markets in roughly 50 stocks. So if you wanted to buy or sell any of those particular stocks, you simply went to the trader who specialized or made markets in them. So I did that for roughly 9 years. I traded through the crash of 1987 and the bull market that followed. And even though I had access to all of this high-speed information at the time, and knowing what the institutions were doing, as well as the orders in my book, and knowing what the big brokers were doing around the pit, I still couldn't make a dime. I had a very difficult time. And so my mentors taught and trained me. These were specialists themselves who saw how much I was struggling. These are the things that have been able to sustain me for nearly 4 decades. So this is what I do with all of my members and students. I simply mentor them the things that have sustained me and been able to allow me to trade for 4 decades. So this is what we do at Specialist Trading. We are first and foremost an educational company. Now, as you'll see today, I'm going to educate you by sharing with you these 3 things, these 3 resolutions I think that are very simple to keep but very powerful once you apply them to your trading. And you'll be able to, once again, to start implementing them as early as just the next 45 minutes. But we are firstly required to show you our disclaimer. So if you just take a moment to please view it, I'm going to show you a lot of performance results by implementing these 3 resolutions for 2017. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, so please take a moment to view it. And as you are doing that, I would also like to invite you all to follow us on Twitter if you haven't done so already. Here's our handle right there, abbreviation for Specialist Trading. You may want to write that down. Every day I post new information, anywhere from actual signals that our strategies have generated to just little bits of wisdom along the way. In fact, I believe yesterday I posted a sell signal in the euro dollar, which already had a nice 60 to 70 point pip gain, I should say, within 24 hours. So we post signals or information on all the markets that our strategies generate or have techniques apply to, anywhere from Forex to stocks to futures, even to some commodities and other markets. So lots of great free information. Feel free to follow us on Twitter. Now, as I stated earlier, we are first and foremost an educational company. That's what we're all about. As you see here, my goal is not to force feed you signals the way some other websites do by telling you nightly what to buy and what to sell. Even though we do provide our students with signals, they are meant as an educational tool. So in other words, you know what to look for. We're not simply there to force feed you signals so that all you have to do is go buy and sell whatever we say, because we can almost guarantee that'll be a recipe for a disaster because you're not becoming a part of the process. We want you to learn everything that I've accumulated and shorten your learning curve so that you can be making your own decisions roughly within a matter of months, so that you can be on your own. You won't have to be wasting a lot of time, energy, and most especially money, because you'll have all the information and it's there in front of you now to apply. So as you can see, my goal is to teach you how to trade with a specialist edge. This is the same edge that was able to turn my trading around some 40 years ago, and I believe has been allowed to sustain me for 40 years. And this is the same edge I teach and mentor to all of our students, members around the globe in roughly over 110 countries around the world, as well as virtually every state in the United States. Okay, so I'm going to teach you 3 great resolutions today. But before we begin, since this is a classroom and since we're going to conduct it that way, if you have any questions, please wait till the very end of the class to ask any. It'll probably be within the next half hour or so when we conclude. I promise I'll get to each and every one of them. The only question I will answer at this time is the most common, and that is this being recorded? Yes, we record all of our presentations, so if you have to leave early or if you're having technical difficulties, we can supply you with a link. Pro Trader Strategies, my sister site, will provide you with a link. All right, so let's begin. Once again, if you joined us late, please wait till the very end of the presentation to ask any questions. All right, so let's start out with these 3 trading resolutions. Remember, we apply these. I certainly apply these in all of my trading. I haven't stopped doing this for nearly 4 decades, and I think once you learn these and really focus and see how simple they are to keep, but really, how most people don't dare do them because they feel like, well, that can't be valid. I'll show you a bunch of examples, and you'll see that they really do have a lot of power behind them. All right, resolution number 1. In my belief, this is one of the most powerful ones that you should keep, and that is stop listening to news. Now, I know that all of us were trained that that's how you make your decisions based off the news, okay? In fact, as I stated, I first started trading on the floor. I made markets in roughly 50 stocks. I had to know everything about the workings of each individual company. I had to know their earnings. I had to know what they were based off, how the companies were doing, who the new CEO was, any news affecting them. And trust me, it didn't make me a dime. So my mentor saw how much I was struggling and said, Steve, if you are investing, if you're holding positions anywhere from 5 to 20 years, then yes, you have to listen to the news. You have to know about economic conditions. You have to know about the inner workings and the basis for the company you're investing in or the commodity or whatever the future. But if you're holding positions, which the majority of traders do for anywhere from a couple of weeks to a couple of months, it absolutely makes no difference. In fact, it actually works against you. Let me show you what I mean here. And these are actual examples taken from this past year. This was in the Los Angeles Times in September. In fact, as you can see there, September 11th. Now, stocks plunge after remark that interest rates could go up. So that's the news, right? It says U.S. stocks plunge Friday after remarks from another Fed official that suggested interest rates could go up next week. David Kelly, chief global strategist for JP Morgan Funds, says the Fed's cautious attitude towards raising interest rates, even a little, is causing strong market reaction. So if you followed that news, let's say you were long. If we look at the chart here in the S&P 500, let's say, well, we thought the market was going up. We've been rallying here. We're kind of consolidating, getting ready to go up higher. Then that news comes out, and guess what? You have a long position. Let's say you have some options, some stock, maybe even some futures, and it hurt you tremendously, most likely you got stopped out with a loss, or you just said, you know what, I can't get involved in this anymore. I'm losing too much money, so you threw in the towel. Okay, so that was on the first announcement. Now the very next day, September the 12th, here's the LA Times column here. Stocks close solidly higher on hopes that the Fed won't raise interest rates this month. So the report says that stocks surged Monday on Wall Street after a Federal Reserve official said the central bank shouldn't raise interest rates too soon, which came as a big relief to investors. Okay, so investors bought safe investments that paid big dividends because they're more enticing to investors when interest rates and bond yields are low. So guess what? All of a sudden, all of the bad speculation, all the bad news that came out is now been wiped away, swept under the rug. Now it's all good. So in 24 hours, the news now turns to positive. But the only problem is you've already exited. And if you're an aggressive trader, you may have even gone short. So now let's say you're short, or let's say you're out of the market, and the market goes right back up to where you thought it was going to be. Okay, so if you were short, unfortunately, let's say you cover your short, you lose again, and you decide, well, listen, if things aren't going to be bad, I'm going to double up, I'm going to buy again, get back into my original position, maybe I'll buy more, and this way I'll make back everything I lost on the first two trades, and I'll make it back even more. Okay, so that was the 12th. Now let's go to the very next day, September the 13th. Guess what? The headline reads, stocks tumble on worries about the Fed and economic growth. Okay, so now U.S. stocks abruptly changed course again Tuesday, taking large losses. Investors worried about the possibility of a weaker global economy and tried to anticipate the Federal Reserve's plans for interest rates. So energy companies fell with the price of oil after a leading industry group said demand for oil is down more than it previously thought. All right, so lots of bad news. Okay, so now you got back into the market and you're even lower. You have another losing trade. Okay, now I'm not saying this to be condescending or arrogant. This is the way I used to trade. So I'm saying this from firsthand experience. There is no validity in following the news if you basically trade for a couple of weeks to a couple of months, because this is the type of thing that happens. In fact, my mentors taught me something, and they said something that really changed everything for me. Here are the exact words they said. And as you can see here, look what eventually happened to the market. Their words were, when you make your trading decisions based off of the news, you are not trading with a purpose. You are basically just a leaf at the mercy of the wind. So what does that mean, you're not trading with a purpose? Well, basically, you're giving your power away. See, what you've done is you've let someone or something else make your trading decisions for you. Someone says the market's good, okay, then it's okay for me to buy. Someone says the market's bad, oh, I better sell and maybe I'll go short. But then the next day someone says the market's good, so I get back in. Do you see how you are not anywhere near a part of the process? You are not trading with any sort of purpose. You're basically, as you see here, just a leaf at the mercy of the wind. That in no way is any way to be trading. Can you imagine someone else in another profession, say a lawyer, a doctor, or an airline pilot, conducting their careers the same way? Well, I think I'll fly at this level. No, I know what, I think I'll turn around now because the wind has changed. No, you know what? I think I'll go this direction. If you were an airline pilot or a lawyer or a doctor, I think I'll operate this way. Oh, that doesn't look too good. I think I'll operate this way. You know, that's ridiculous. Unfortunately, this is the way most traders trade. So trust me, stop looking at the news if you are like the majority of all traders, just holding positions for relatively a short while. Now, what if someone says, well, Steve, I don't trade stocks, so I really don't have to worry about that. Well, that's not true, because this flies in every category of trading. For example, if we look back on that article on the 13th in the LA Times, we see here that at the very bottom it says energy companies fell with the price of oil after a leading industry group said demand for oil is down more than it previously thought. So there was the news there in commodities. So if we look at a chart of oil on the exact same day here, we see how oil fell, all right, on that bad news, okay? Once again, if you had paid attention to that news and been a leaf at the mercy of the wind, well, look what happened in the next month. Oil made new highs. See how silly it is to follow that if you're a relatively short-term trader? It doesn't make any sense. Now, what if someone says, well, once again, Steve, I understand this looking at the overall picture, but I trade individual stocks. So I need to know things about individual companies, whether it's just a rumor or whether it's what somebody says about the company, whether somebody upplays it or downplays it. I need to know that because that affects it tremendously. All right, well, let's move to this announcement that came out that was actually tweeted by President-elect Donald Trump just about a month ago on December 6th. President-elect Donald Trump chided Boeing in a tweet, arguing that its new Air Force One design was way too expensive and should be canceled. As that topic trended on Twitter, the aerospace giant stock took a hit. Immediately after Trump's tweet, Boeing stock fell precipitously, recovering a bit over the next couple of hours. So if we look at the chart here, we see that that was the day the bad news came out. And actually, it didn't close too badly. But let's say you had heard that news on the tweet and saw the indication that the stock was going to open much lower. Well, if you were long the stock or thinking about getting long, you may have said, you know what, I'm going to wait on the sidelines because this is probably bad news. You know, if the president-elect doesn't like Boeing, for sure that stock's going to get hit. He's a businessman. He knows what he's talking about. He's maybe change companies for that, so or get a lower, type of deal with Boeing, and they won't make as much money. So you know what? I'm going to sell my stock, or else I'm going to not purchase it. All right. So if you were trading off that individual bad stock news, you would have missed a 5% rise in the next week. Okay. So do you see once again? There is no reason to follow news. Now remember, I traded on the floor. I was in charge of making markets for over 50 stocks, anywhere from US Air to Waste Management to IBM at a time. All right? Don't you think if anyone had to know what was going on with the company, it would have been the market maker? Well, guess what? I didn't look at any of that information. In fact, I specifically forced myself not to look at it. And I'm still here. I'm still trading 4 decades later. So take it from someone. If you're having difficulty grasping this concept, if it can work for me, it can work for you. Trust me, it's only going to get in your way. All right, that's resolution number 1. Let's go on to resolution number 2. You must trade in sync with the trend. All right, I'm sure most of you are saying, okay, who doesn't know this? This is trading 101. Everyone's supposed to be trading in sync with the trend, right? So what's the big deal about this? Well, that's true. But if everyone knew and applied this to the trading, then why do, once again, 80% of all traders fail? It's because everybody has a different idea of what the trend is. And most traders, in my opinion, have the incorrect or basically just a mediocre idea of what the trend is. So for example, let's look at this generic chart. You've seen me in presentations talk about this before. Someone looking at this would say, Steve, there's no trend here. We're going down, we're going back up, we're going back down. So the guy I subscribe to, the chat room or the trading room, says you got to stay out of markets like this because this is where you get hurt. This is where there's no trend and you're just going to get whipsawed, okay? Well, this is once again the way most people are taught, myself included. But once my mentors got a hold of me, they said, Steve, the best way to find out what the overall trend is of any market and of any time frame is to apply a 50-period moving average. And then you ask yourself this question before you do anything. Before you pull a trigger, you ask yourself, where is price in relation to that 50-period moving average? Okay? I'm going to say it again. You may want to write that down and put it on a Post-it and place it on top of your screen there. Where is price in relation to the 50-period moving average? Because as you see here in this example, price is above. So then what is it telling us? It's telling us that the overall trend is up. And that's all you need to know. Because if the overall trend is up, you will never be selling. You're only going to be a buyer. You've just added a tremendous amount of consistency to your trading. Okay? Now that's how simple it is. That's how you find the overall, not the short term or not the detailed trend. We have ways for that in our courses as well. But the overall trend is determined by using the 50-period moving average. Now, once again, let's look at this generic chart here. It doesn't matter if this was a monthly chart. It doesn't matter if this was a futures. It doesn't matter if it's a tick chart. It makes no difference. But someone once again would say, well, there's no trend here. We're just going sideways. You're going to get whipsaw. It's a range market. Well, that's not true, because once we apply the 50-period moving average, we ask ourselves, where is price in relation to the 50-period moving average? Now, in this case, price is below. So if price is below, we will not even consider purchasing anything, regardless of what time frame this is. In order to add consistency to our trading, we will only be a seller. Why? Because the overall trend is down. That's how simple it is. I told you at the very beginning of this presentation, these concepts I'm going to be revealing to you today, these resolutions are extremely simple, but extremely powerful. And, you know, it's okay for something to be simple, but being able to implement it is extremely difficult. And this is where most people have difficulty. Now, let's take an example here in MVDA, okay? This is in a fairly new sector. This is artificial intelligence, okay? Now, as we can see here, this stock, MVDA, it kind of appears, this was last year, about 10 months ago, it's going higher to sideways, but there's no real established trend here, okay? Now, someone looking at this will say, well, you know, don't really know what's going on much with this company. We're kind of in a sideways mode. There's going to be news coming out where the industry is not that good, so I'm not going to really be involved. I have no idea what to do with this, okay, because I don't know what the trend is. Well, once again, that's not true. If you want to find out what the overall trend is in any stock, future, commodity, currency pair, add the 50-period moving average. Now, looking back as far as 10 months ago, where was price in relation to the 50-period moving average? Price was above. So you know that you would not be selling this stock. It doesn't matter if someone said, well, we've done all the research, we've looked at this sector, and it's not very good. In fact, it's really overhyped. You should be shorting this stock. It's too high. We don't like the PE ratio, you know, whatever. I mean, those are the things I stopped looking at 40 years ago. All I know is that if price is above, I'm going to look for some structure to buy. Now, it doesn't mean I'm going to buy at the market. It just means I'm going to look for some type of structure. And it would have been a good idea to do that because the stock shares increased almost 180% by the end of the year, okay? And if you look at this chart, where was price the entire time coming into 2017? It's been above the 50-period moving average. So do you see how powerful this tool is? This is all you need to know to find out what the overall trend is. Now, remember, this is not a system, it's not a strategy. It's just a simple but powerful tool telling you what side of the market to be on. And guess what? It's free. You all have access to it with any charting software you have. All right, resolution number 3. Going down the list here, our last resolution is to look for bars that close either in the top or bottom 25% of their range. You've heard me speak about this before, but this is extremely powerful edge to have. Let me share with you what I mean here for those of you who have never seen this. Now, here's what we're looking for in the bar, okay? It doesn't matter, once again, if this were a tick chart, a monthly bar, a yearly bar, or a daily bar. It makes no difference. But if we close in the top quarter, all you have to do is divide it by 4 separate but equal parts. And if we close in that top 25%, that is an indication to buy, okay? Now, if you trade candlestick charts, it's no difference. You simply measure the top of the wick to the bottom of the wick, divide by 4, and if you close in that top 25%, that's an indication to buy. That is the market telling you it's going to go higher, most likely. Let me share with you on that same chart we looked at earlier, this generic chart. We have 2 bars here that close in the top 25%. Now, as you can see, this one started to go a little bit, but it didn't go that much, but that's okay. We still went up after that. Now, here's another one, and this one really took off. So you see, you have this edge in your favor, not coming from some guy in a chat room, not coming from some guy on TV, not coming from a news event, but coming from the market. Now, conversely, if we have a bar like this, doesn't matter if it's a tick chart or a monthly bar, if it closes in the bottom quarter, meaning that you divide the bar by 4 separate equal parts, and it's the bottom 25% where you close, in fact, we close at the very low, that in itself is an indication to sell, okay? Once again, it makes no difference if you're trading standard, open, high, low, close, or if you're trading candlesticks. It makes no difference. You just simply measure from the very top to the very bottom of the wick. If you close in that and divide by 4, if you close in that bottom 25%, that's the same exact thing. Now let's look at that generic chart once again. Now we are below the 50-period moving average. This bar closed in its bottom 25%. And don't you think it was giving you a great clue as to which direction it wanted to go? So you see, now we're adding structure to our trading. We're adding tremendous structure. Now, a lot of people don't trust this. They go, well, I don't understand. Why would this make such a difference? Okay, closing in the bottom top if I'm above the 50 or in the bottom 25% if I'm below the 50? Well, here's the rule. When a price bar closes either at the top or bottom of its range, the market you're trading is giving you a clue as to which direction it wants to go. Remember I said at the very beginning of this presentation that the reason why most traders fail is because you're trading without a purpose. You're basically, listening to someone or something else tell you what to do. Well, this is the only thing you should be listening to, the chart in front of you, the market. It's the source of what you're trading. This is what you should be taking your decisions from. So if it's telling you it wants to go higher, if it's above the 50, if it closes in the top 25%, it's not telling, it's screaming that it wants to go higher. All right? Wouldn't you rather listen to that than to some know-it-all on TV that tells you he knows everything, but really, you're not sure whether they can back it up? Listen to the market and you'll really increase your odds for consistency. This is what my mentors taught me, and once again, this is what I believe has made all the difference in giving me the longevity for 4 decades. All right, so the beauty of this is that all 3 of these resolutions go into making one of our most, I would say, consistent strategies at specialist trading. This is strategy number 4. This was actually a strategy I was taught on the floor of the stock exchange some 40 years ago. We've altered it a little bit to make it a little easier to trade, but it's basically the same, I would say 95, 98% of the same format that I was taught. Because remember, when I used to trade this, I would trade it to be in and out of the market in a matter of minutes. We would trade it for, I'd take maybe a half point and get out. But now we've applied it and changed it so that you can trade it for daily bars, weekly bars, tick charts if you like to. It's a great, great strategy. I use it every day in some context with my own personal trading. In fact, here are some of the highlights of this particular strategy. It's for virtually all traders. So it doesn't matter if you've been trading 20 minutes or 20 years. We have hedge fund traders trading this. We have people that just started trading this past week. Everyone gets the same basic format when they become a student of mine with strategy number 4 course. And then after you learn the basic format, then we work and mentor with you to make it, mold it to fit and meet your needs. So if you're more aggressive, you can trade more aggressively. If you're more conservatively, you can trade more conservatively, okay? Now, it was designed for traders looking to catch quick momentum moves. As I said, that's the way we used to trade it on the floor. So if you're a day trader, it's perfect. But we've also added different things, exit points, stop placement, ways in which to track the trade, so you can be in the trade weeks if you like. Now, its intensity level, if 1 was the most intense out of all strategies you've ever traded, meaning that you couldn't even leave your computer screen, you had to be planted in front of it, and 3 was the most relaxed strategy where you basically enter an order and walk away for a week, well, it's right in the middle. It's a number 2, very moderate, simple to trade strategy level number 2. Now, it only uses 1 indicator, okay? And guess what? You already know what it is. It's the 50-period moving average. It's already the one I shared with you today. So I've already given you a couple of the rules to this strategy. The best thing about strategy number 4, not only its consistency, but it can be applied to any time frame, any direction, and any market. So I know a lot of our traders say, well, Steve, I don't trade stocks. I trade currency pairs. Great. We have members all over the world, in China, in Saudi Arabia, in Europe, all trading strategy number 4 with currency pairs, intraday and for investment purposes. We also have students trading it intraday on stocks and on futures, so it doesn't matter. We also have people using it on monthly charts for their IRA accounts. It's a great, great strategy. Now, if you become a member of the course, you receive automatic buy-sell indications as well as part of the package. But remember, our edge is consistency. We're not going to sit here and tell you that every trade works. In fact, I will show you a few examples where it doesn't work. But the beauty of strategy number 4 is in its consistency. And what is consistency? Consistency is just simply 2 steps forward, 1 step back. It means that you will have winners every once in a while, but as well, you will also every once in a while have small minor losses. Consistency just means that the ability you have to make back and recoup those losses at a quick rate. And this is what we've seen with strategy number 4. So don't worry, it will have small minor losses from time to time, but the beauty is it's able to recapture them right away, okay? So let me share with you some strategy number 4 examples in all markets, and you're going to see how they apply those resolutions that I just shared with you and taught you, okay? And once again, if you happen to join us late, if you have any questions, kindly wait for the next 15 minutes and then we'll go over the question and answer portion. All right, so let's start out with stocks for all you stock traders out there, and let's look at Boeing. Now, remember we talked about Boeing, how President-elect Trump had tweeted how he was displeased with the large costs and he didn't like it, and the stock actually gapped down lower here, but then firmed up towards the end. Okay, well, how could we been involved in this, even with that tweet coming out and the supposedly bad news? Well, what's the first thing we do? We're not going to listen to any news, so we would care less what someone tweeted, what some CEO said, what some economic report came out. We don't care about those things. Remember, those things will only confuse you and lead you down an inconsistent path. So if we're just relatively trading for the short term, couple of weeks to a couple of months, we don't need to know that. All we need to know is the first thing. Where is price in relation to the 50-period moving average? Because this is going to tell us whether we should be buying or selling. And once we apply the 50-period moving average, we see that price has been above going back for the last month or two. So we've known all along that we should have been long this stock in some capacity. Now we have to look for structure though, all right? So what's the other rule that I taught you? Look for a bar that closes in the top 25% of its range. Now here's the day that President-elect Trump tweeted, okay? And guess what? That same day we close at the top 25% of this range. We're above the 50-period moving average. So the automatic software generated a buy signal that day. And that's where you could have taken advantage of this nice 5-day run of about 4 or 5 points to the upside, okay? Or actually, I think it was about 7 points. Now, someone would say, but boy, Steve, look at all this we missed back here. Well, actually, you didn't, because if you knew the rules to strategy number 4, there were also 3 other signals generated. One way back here in October, another one in the beginning of November, mid-November, and then the last one was generated at the beginning of December. So this is all included, and as you can see, each and every one of these bars close in the top 25% of their range. Now here's an older chart of PRGE, but I want to show you this because this is the way most people would trade. They'd say, well, Steve, looking at this chart, I mean, there's major support here. I like to follow the institutions, and all the institutions are buying here, Steve. In fact, I'm looking at the volume, and I'm looking at the institutional reports, and they all love this stock, PRGO. And so this is a double bottom as well. So I'm going to really look to buy this. I purchased some shares, and if it comes down to that level again, I'm going to buy some more. All right. To see how all that decision making was based off of an outside source, other institutions, volume, some indicator, what some guy's telling you, some economic report, whatever. That's silly. What do we only have to rely on? We want to know if we should be buying or selling. So what's the first thing we do? We add the 50-period moving average. And for all intents and purposes, the majority of the bars have closed below. So we don't care about support. We don't care about Fibonacci support and resistance levels. We don't care about any of that stuff. We just know that we're going to look for structure in order to sell. Now, strategy number 4, software, generated a sell here. Now, it didn't go down that much, but then another one was generated here. So sometimes you'll see this where often something isn't generated off of the very first signal, but on the second one, that's where it kicks in. And the stock dropped 40 points in just 3 weeks. Now, the reason why I show you this older chart from last year is not because of the big drop, but was because obviously some news event came out or something, someone said something or something happened to have this stock drop tremendously, 40 points in just 3 weeks. But the beauty is, did we know anything about it? Did the CEO of the company call me up and tell me to post sell signals for all my students? Did anyone alert us? A small little company, in America telling people all these strategies? No. We already knew to go short simply by finding that price was below the 50 and that we had bars here that closed in the bottom 25% that met all of the other rules of the strategy that I can't share with you. You see, we take all of our setups and signals from the source, which is the chart in front of you. We don't need to listen and wait for news. By that time, it's usually too late. All right, how about JP Morgan, okay? Now, we shared with you this chart earlier today at the very beginning of the presentation. So I'm going to share with you how we could have taken advantage of this. Remember, we're not listening to any news. We don't care what anyone is saying. If someone is saying this is, some type of rangy market and that it's a whipsaw market, we shouldn't be involved. The volume is low. This is making some type of a double or triple top. We don't care about that. All we care about is where price is in relation to the 50-period moving average. Now remember, I shared with you, we had 3 signals that were generated here. How could we have generated those signals? Well, we're above the 50-period moving average, and all of those bars closed in the top 25% of their range. Now those are just 2 of the rules. I still haven't given you stop placement or exit points or another pattern recognition that we look for in strategy number 4. Those are the 3 remaining rules. But I'm sorry, I can't give those to you right now. It wouldn't be fair to the people that spent a good amount of money purchasing the course. But I've given you 2 of the rules, the 50-period moving average rule, as well as the price closing in the top 25%. And once again, no one called us up and told us the stock was going to take off. The market told us it was going to take off. We knew from the signals generated because the market tells you what it wants to do. So listen to the market instead of outside sources. That was just in November going into December. Now here's CVS, the same thing. We're in coming into November here, just a little over a couple of months ago. Once again, most traders, 99%, would say, well, we've got support here. The institutions and volumes say that this is a double, almost a triple bottom. We've got to be buying this. Don't listen to outside sources. What is the market telling you? Well, the market is telling us that the overall trend is down because we are below the 50. So we don't want to buy anything. So I don't care what some chat room says, what some guy on TV says. We're not going to be buying CVS until it has consistent closes above the 50-period moving average. And at the same time, we're going to apply our structure, the rules included in strategy number 4, and they generated 2 sell signals here. Each of those bars closed in the bottom 25% of the range, and they met all the other rules. And look what happened. The stock dropped 18 points coming into December, this past month, okay? Once again, no one told us that the stock was going to drop this much. The market told us. Now, remember we talked about MVDA. We talked about, wow, this stock just went up like roughly 180% in the next year, okay? Now, I'm not saying that you could have caught that, but remember, we knew well back 10, 11 months ago that this stock should only be purchased because it's above its 50-period moving average. And so once you add some structure, could strategy number 4 have helped us at least to buy this along the way? Well, if you simply added the the software, you would have seen that you had a number of strategy number 4 buy signals all the entire way that the stock was going up. So do you think they could have helped you purchasing MVDA this past year? Now, a lot of our students have said that they like to use this as a market timing tool. So as you see here, this is the DIA, this is the diamonds, or the ETF for the Dow Jones Industrial Index. Now, rather than actually trade this ETF, they use it as a market timing device. So if there is a sell signal generated, basically they know that the market's going to go down, and then they can apply it to some other tradable unit. So right here, a sell signal was generated in the diamonds, and the market followed suit and went lower. Then all of a sudden we had a nice move up here in mid-November. So closing above, even just with 1 day closing above the 50-period moving average, that is enough to generate a buy signal using strategy number 4. And in November coming into December, the market went up tremendously. So you could have covered whatever shorts you had because you had a signal now that the diamonds were going up. So most likely the industrials would be going up. And so maybe you wanted to start looking for long purchases based off of this market timing tool. All right, let's look at an entirely different market here. Let's look at the EMINI S&P, and I'm going to show you how sometimes it does not work. So I'm not just cherry picking here. I'm going to look at an older signal here in the EMINI. This is the EMINI future on a daily time frame. This is going back a couple of years to August of 2015. Now, here a buy signal was generated. Now, this is a little bit more advanced for more advanced traders because, as you can see, we're oscillating above and below. So even though we haven't got a clear-cut signal as to how much we are either above or below, the strategy basically in its most basic form says as long as you close above and all the rest of the rules of the strategy are met, you can still generate a buy signal, although it is rather aggressive, and we only suggest this type of trading for our more aggressive students. The beginners and conservative traders would not apply this. But having said that, this was a valid aggressive buy signal given on the August the 10th in 2015. And as you can see, you would have gone long and most likely been stopped out, okay? So this is what I'm talking about. This is what consistency means. It's just like, in all facets of every career category around the world. In fact, every athlete does not win a gold medal every time they go out. Every basketball player does not make a basket. Every baseball player does not hit a home run. But it's just about consistency, being able to recoup and go back on track. So as you see here, it's the same way with trading. It's okay to have a small loss every once in a while, even two. It's okay as long as your strategy is able to make it back. So this was a loss, okay? Now, a week or two later, we have a sell signal that is generated. Now, all of the rules were met, and now this time we close below and in the bottom 25%. So because you believe in this strategy, you know that it can make back its losses. You could have switched and gone short, and guess what? The E-mini fell 230 points in the next, 3 days. I mean, that comes out to roughly about 1,600 Dow points, okay? So this is the beauty of strategy number 4. It will lose every once in a while. I told you that, but that's perfectly normal. Just as, everything in life has seasons, but its ability to recoup and be consistent is what is so special about the strategy. Now, as we go to a smaller time frame, here's a 5-minute chart of the E-mini. Okay, now looking at this, we say, boy, yeah, Steve, in hindsight, it looks great because you look back in hindsight and it's easy to see that you should have been buying here because we were going up the entire time. But how would I know it's going to be going up that day on a 5-minute time frame? Well, actually, it's not that difficult. Remember, what's the first thing you do? Add the 50-period moving average. And so even in the first half hour, you were above the 50-period moving average. You knew that you were only going to be a buyer. And if you applied the software for strategy 4, it generated 2 signals that day, and you could have had a 10-point or $500 per contract gain in just about 3 hours with this. Now here's a 10-minute chart. As you can see, where is price? Well, price is below the 50, so we're only going to be selling. Now, as you can see, 2 sell signals are generated, and if you were lucky enough to carry the position over into the next day, well, that was 70 points in your favor, $3,500 per contract. If you like to trade hourly time frame, here's a great example of how you can switch from going short to going long and vice versa. As you see here at the beginning of this chart, we were below the 50-period moving average. So what is that telling us? It's telling us we're only going to be a seller. And so look at the sell signals that were generated to go short. Now once we changed gears and went above the 50, now we are a buyer. And now look at all the buy signals that are generated to go long. Now, just to show you that we're not cherry picking, let me share with you what happened yesterday. Let's go to an even smaller time frame. Let's go to an 1,000 tick bar chart, okay? Because we know a lot of our students like to really trade small time frames. So let's go to a 1,000 tick bar chart. You can see here we're below the 50, we're above the 50, back below, back above. Someone would say, boy, Steve, how can you trade this? Well, these are all the signals that were automatically generated with the software. You think you could have made a profit with any one of these? Now, we had a couple of that were losses. For example, this buy signal at the very top would have generated a small loss, but don't you think you could have recouped it going short on this next downward move? Okay. So there's just tons and tons of consistency here using the same rules I taught you in these 3 resolutions. Let's just not stop with the E-mini markets, I should say. Let's go on to the Forex currency pairs. Here's a monthly chart of the Australian dollar. Doesn't matter because we changed markets or we changed time frames. A monthly bar uses the same concept. We don't listen to any news, and we just follow the first rule was where is price in relation to the 50? We're below. So we have this bar here that closed in the bottom 25%, and it met all of the other rules of the strategy. So the Australian dollar went down 2,300 pips in the next 6 to 8 months. That's about $23,000 per contract if you decided to stay in that long. We can go to a weekly time frame, and this is kind of difficult. We're going down, then we're going back up. So how do we know what side of the market to be on? We add the 50-period moving average. So it doesn't matter if we were going down. We know that we're only going to be a buyer. And look at the buy signals. It generated 1,100 pips in about 6 or 8 months as well, $11,000 per contract. So let's recap before we go to the question and answer portion. Remember, these are the 3 trading resolutions you should start applying ASAP if you want to get on that road to consistency. Remember, a trading resolution is usually broken by mid-February. Okay, you just have about a month left to go before you break all the resolutions you made this past week or so. All right, these are 3 easy to keep resolutions that you can start applying today once I conclude this presentation. The first one is, please stop listening to news. As I stated, if there was anyone that off of conventional wisdom should have been listening to news, it was me when I was on the trading floor for 16 years. And I didn't listen to news at all. You know, once my mentors, who were specialists themselves, told me to grasp that concept, that really turned my trading around. So I know it's a difficult concept to grasp. I know a lot of people say, well, how can I do that? I've always been trained, and news is what determines everything. Take it from someone who's been there. If you are investing for 5 to 20 years in your long-term positions, yes, you do need to look at the news and the inner workings of a company. If you're trading anywhere from a couple of weeks to a couple of months, even 6 months, it makes no difference. In fact, it's only going to make a difference in making you more inconsistent. It'll get in your way. So try it. Just paper trade with a while. See if you can apply trading in sync, and you won't even have to use the news at all, because you'll be using resolution number 2, which is simply the 50-period moving average. Remember, if price is above, you should only be looking for buy setups. It doesn't matter if you trade one of my strategies, one of yours, or someone else's. All that matters is that you should only be a buyer, and that's it. If price is below, you should only be looking for sell setups, okay? In fact, I can almost guarantee that your losses this past year were mainly because you were out of sync with this simple resolution. You were buying below the 50 and selling above. Go back and look at your losses this past year. I can almost guarantee that that's why you lost. And then thirdly, the last trading resolution is the price bar pattern. If you are above the 50-period moving average, look for those bars that close in the top 0.25% of their range. That's a clue, not coming from some guy in a chat room or on TV, but a clue coming from the market telling you it wants to go higher. What a great edge to have coming from the source, all right? And just reverse it for price bars below the 50-period moving average. And then lastly, you see that all of these 3 trading resolutions are actually the rules that are incorporated in one of our most consistent strategies, strategy number 4. I use this, and I've been using this in some context for the last 40 years in my daily trading. So I want you to ask yourself before you ask me questions, and I want you to be honest. Do you think these resolutions could have helped your trading this past year? Once again, go back and look at your trading results for this past year. If you're not happy with them, I can almost guarantee it's because you were incorporating the opposite of these 3 resolutions I just gave you. Well, guess what? 2017 is going to be a great year for you, okay? I want you to be excited about 2017 because we have a great offer for you today. Here's our special attendee discount for all the people that have attended today, but it's only going to be good for the next couple of days, I believe for the next 48 hours. We're going to be offering you strategy number 4. Remember, it can be applied to stocks, EMINI markets, ETFs, Forex markets, commodities as well, all right? This is a great, great offer we have for you because when you usually buy the full complete course, we call it the full enchilada here, you have to pay for $6.95 for instant course access. But also the full complete course has a $695 fee for the add-on. This is the add-on you put onto your software that automatically generates the buy and sell signals. But you also have to pay $695 for the signal alerts because we provide you with signal alerts that tell you for educational purposes when a signal has been generated. We give you email alerts for daily bars, okay, in the different markets, all right? Now, this brings the complete trading course to $2,085, almost $2,100. Well, we're not going to offer it for that. In fact, we're slashing it tremendously for all the attendees today for just one price of $695. That's it. So for the price of just the educational course without the add-on, without the signal alerts, we're throwing that all in just for $695. But please remember, this is for a limited time only. In fact, I think Pro Trader Strategies, who handle all of my marketing and all of the course sales, they say this is only going to be for the next couple of days. Now, just the signal alerts is worth its weight in gold because we use them as an educational tool so that you know what to look for. In fact, let me share with you what was on our signal alerts just this past week. On the 8th, a signal was generated. As you can see here, this is what goes out to all of our people in the course. And as you can see in you all, United Airlines, a strategy number 4 buy signal was generated. Okay, this was on the 8th. This was just this past, I believe, the 8th was actually on Sunday, so this was actually on Friday, the 6th. But that email alert would have been issued on the 8th for entry on the 9th. So here is the chart of United Airlines. Where is price in relation to that? All right, price is above. Are we listening to any news about the company? Because after all, the stock has been going lower. Maybe there's some bad earnings reports. Maybe some institution didn't like the stock. Are we listening to any of that? Absolutely not. We're just looking at price behavior. And according to all the rules of strategy number 4, 2 of which I just gave you, we have a bar that closes in the top 25% of its range. So the software generated a buy signal. Okay, this was on the 6th. We emailed the alert out on the 8th, but most likely if you are an experienced trader, you would have noticed it on the 6th. You could have gone long that day if you wanted to, or gone long on Monday, the 9th. And the stock gained. I took the snapshot this morning. The stock was up 5 points in the next 3 days, okay? We didn't know the market was going up. We didn't know why it was going up. We don't care. The only point is the market tells us what it wants to do. As you can see here, as it was coming lower, where were these bars closing? They were closing towards the bottom of their range or the midpoint. But right here, we closed towards the top. So this was our clue. Plus, we're above the 50-period moving average. Plus, we have another pattern that we look for that we teach you in the course that was met. Now, even though we close in the top 25%, maybe the pattern isn't met here. So that's why signals were not generated. But we got a signal right down here, and you had 5 points to work with. Now, we teach you all the exits. We teach you all the different entries, all the different stop placements. It's all included in the course. Remember, everyone gets the same format, and then we work with you to decide how you want to exit. Do you want to just take one quick point and get out? Would you like to go for all 5? Would you like to stay in the trade and move your stop up with a trailing stop? All of this is included in the course. But remember, ultimately, our goal is to have you make your own decisions. This is how you become consistent. We're not a signal service. We don't want to just give you the signal and say, this is what you do. Good luck. You have no say. We're in charge. That's a recipe for disaster. Remember, my goal is to teach you, not to trade for you. So we provide this as a signal service, roughly $695. This is all included. All right. So a $2,100 value for $695 only, but this is for a limited time only. Remember, it includes instant course access with all 12 videos, as well as the add-on that automatically changes or generates the buy and sell signals, changes from red to green, telling you if a buy or a sell signal is generated, plus the alerts. Okay, $695 altogether. Here's how to take advantage of that. Contact my sister site, which is Pro Trader Strategies. They market and promote all of my courses. As you can see, there is their email address. Probably the best thing to do would be to contact them to get this deal right away and make sure that it's all sent to you properly at 310-598-6677. Now, as you can see there, that is the direct link for the sign up. Okay, it's not a live link though, so you would have to copy and paste that onto your browser in order to go there. If you're having any difficulty doing that, just contact Pro Trader Strategies or email them, and they can set you up right away. There's no obligation. You can ask them more questions. If you look on the far right-hand corner in the chat box, I believe they have already posted a live link. So all you have to do if you want to go there, you don't have to copy and paste this link onto your browser. You can simply click that on in your chat box of the GoToWebinar column, and it will take you to that great discount, $695 discount, okay? I'm gonna leave all this information up and open up the question and answer box and see if you have any questions here. Let's see here. Michael, hi Michael. He says, I have strategy 4 and 5. Yes, I know, Michael, and know the 25% range. But what is the software you refer to that generates the buy and sell signals? Well, this is the add-on. This is the add-on that will generate the buy and sell. If you have strategy 4 and 5, Michael, you should have that add-on included. I would contact Pro Trader Strategies because they have all that information. They deal with that. But Pro Trader Strategies, your trading consultant, can help you answer that. But the add-on is just simply a term for the code that you add on to your software that will generate buy and sell signals for you. Okay, and Michael, yes, I know. All you have to do is contact Pro Trader Strategies, and they'll fill you in with all the information right away. Let's see. Amir is asking. I'm using MT4 Forex, so how do I use it for MT4? Well, Amir, we have the add-on for MT4, so you can use the strategies with the add-on for MT4 as well. You simply have to download the add-on, and we have a great tech support, and they can do it for you over the phone. They can help you as well. Let's see, you're asking, he's also asking, is the PET D included No, Amir, we're just talking about strategy 4 today because we just want to get everyone on board with strategy 4. But the PET-D is a great, great tool as well. I'm sure some of our students out there are listening today. They can testify to that. But it's a totally different course, but they can set you up with that as well. Contact Pro Trader Strategies, and they should be able to fill you in. Now remember, once again, you're getting a nearly $2,100 deal reduced down roughly 2/3 down to $695, okay? But that's for a limited time only. I know everyone starts out at the beginning of the year. You've heard me say this many times before. We all start out at the beginning of the year with all these hopes and dreams of how we want to do. And I would say that 80% of people never reach those hopes and dreams. And yet the next 10 to 15% basically reach them, but they break even. They don't really achieve where they want it to be. They just have a moderate amount of success. And maybe only 2 to 5% actually achieve those. So, don't you want to be in that 2 to 5% category? The best way is to use these 3 trading resolutions. And then if you really want to add structure to them, get on board with this great, great discount we have with strategy number 4, because all of those trading resolutions are incorporated in strategy number 4. So I can't think of a better way to start out the new year. We're already in the 2nd week of the year, okay? This has been a great time to use strategy number 4 with the volatility we have in the markets, lots of setups, lots of great trades. So this is great for getting on board with that. Remember, if you have any questions for using the signal service, for applying how to get the 12 months of signal service, or how to get the add-on applied to your computer, or how to actually get the videos, is it something sent to you, contact Pro Trader Strategies. They have all the answers for this. I'm in charge of educating you and teaching you how to use this, but it's Pro Trader Strategies that really does the great work of setting you up, of giving you the discount, of possibly they may even have some payment plans as well, so you can contact them for more information regarding that, okay? So remember, 2017 just started. If you're most likely very similar to most traders, you look back at 2016 and say, boy, that wasn't a great year at all. I thought I was going to do great, and I winded up losing more money than I thought. Here's your chance to get on board for a really, really deep discount. $695 for a great strategy that I was taught some 40 years ago that I continue to use in some capacity on a daily basis. I'll be your mentor there in the course. So along with all of this great, great educational tools and strategies we're giving you, you're also getting 40 years of personal experience as your mentor. So you can contact me anytime you like through email, and I will answer any question you have as soon as possible. Okay, so you're getting all of this by someone who's been using this for 40 years, for 4 decades. So great, great deal. If you want to make 2017 the best year ever, come on board and we can help you, put you in the right direction, okay? All right, thanks so much. Please take advantage of that. It's only going to be lasting for, I believe, the next 48 hours. If you have any questions, contact Pro Trader Strategies. There's no obligation. They can answer any question you may have and set you in the right direction. In conclusion, I want to say thank you so much for attending today. I hope you got something out of this. I hope you start to use these 3 resolutions, but most importantly, I look forward to all of you becoming students of mine in the Strategy Number 4 course. Thank you so much. I'll see you next time. Bye-bye.